Now, the BHEL stock price has seen a 40% up move this year. Remember, the company saw a weak second quarter, missing estimates on all fronts, but now they're witnessing business revival and diversification into industrial segment offerings like railways, defense, nuclear areas as well. And this bodes well. To discuss all of this, we are now joined by Dr. Nalin Singhal, CMD at BHEL. Dr. Singhal, thanks very much for your time. Great to have you with us here. Prashant this side. I just want to start with a quick margin question, Dr. Singhal. Gross margins were down 350 basis points in Q2 year on year. That was largely kind of blamed on account of execution of legacy orders, older orders. Could you tell us how this will change as we go over the next couple of quarters? Because the common assumption is, as newer and newer work starts to come in, margins will look better and better. But could you map the journey for us from here?
So gross margins we are looking at legacy orders as well as a huge increase in the material cost, steel prices, copper prices, cement prices, which have all gone through the roof. Yes, so what is really happening is that we have these older orders which are very competitive, there are delays, there are material cost increases. But as we start getting our new orders kicking in, our orders are typically long lead, long cycle time orders. So as the new ones start kicking in various areas, that issue should gradually, we should be able to take control on that issue.
All right. Okay, all right. Noted that, Dr. Singhal. So let's push that point forward then. Gross margins that come down substantially. A few years ago, your gross margins were more than 40%. So do you believe that the worst of gross margins are behind you all? And if you could give us a rough number, what kind of a gross margin band are you looking at, say for the second half of the year and from year on? You have ambitious targets for the next 5 years. So I ask you this.
You see, as I said, the older orders, so for the next year or so also, we will still continue to be faced with this issue. The orders which are now coming in, so typically in the second and third year, they start kicking in. So that, that is when the margins should then start coming back. Of course, we are now in a much more competitive sort of market than we have ever been. So this, we may never get back the old sort of gross margins, but yes, we will certainly get substantial gross margins.
Okay, substantial gross margins. Dr. Singhal, good morning and thanks for joining in. Another opportunity that the street is also very bullish on and you've been talking about is the coal gasification. You've developed technology for gasifier of high ash Indian coal, and you have said to analysts in the recent past that the opportunity will see significant traction in the next few years. Considering that India has a target to set up 100 million tons of coal gasification by FY30, how much do you think BHEL could benefit from this? Can you give us some numbers? What is the opportunity for you? What could the growth look like?
Okay, so you see, coal gasification, as I said earlier also, is a very major area of going forward for BHEL as well as for the country. And you already mentioned the sort of targets that are being looked at. Put it in this perspective that we have the only so far proven technology for high ash coals. Typically what you're looking at, if you look at international technologies which are available today, they are for low ash coals. And Indian coals, 75 to 80% are high ash coals. So our technology has been developed for that and has been gasification technology and has been tested in that for that sort of coals. So that gives us a very good advantage there. We have already signed an MOU with Coal India for an ammonium nitrate plant, another one for Neyveli lignite for coal gasification and IGCC. So we expect that to, and we have a dedicated team working in mission mode. So our commercialization, the technical side is going rapidly, and we as soon as we are able to sign our joint ventures, we will start moving on the construction as well. So I think going forward that we are very bullish on that as a very major area for us.
So just to get some numbers, if you can, I was reading a report which suggested that there are coal gasification orders worth 8,000 crores from Coal India. that could be finalized. Is that a reasonable assumption? And from Neyveli Lignite as well, what is the expectation?
So, I mean, I wouldn't really get into figures right now, but yes, the sort of magnitude you're talking about is a typical magnitude for one plant, which would be about a 1 million ton plant. And going forward, you see, ultimately, cost and prices will come down as we go into volumes, but still, it's a very big number that we are looking at.
Dr. Singhal, let's focus on a couple of other numbers then. The order inflow for the first half of the year was 15,000 crores, right? And your revenues were around 9,500 crores. What kind of an order inflow are you looking at for the year or for the second half of the year? So one is on order inflow. Second factor I want to know is, what do you end the year with in terms of revenues? Gross margins, as you told us, will struggle for the next few quarters. So revenue and order inflow.
You see, as far as orders are concerned, you understand that our ordering is largely lumpy on account of the big power the thermal power orders which have. So we had a 8,700 crore order which came in the first quarter. There are a couple of other orders in the pipeline which we are hoping that something will crystallize in the current year. So what could happen is something happens in March or it happens in April, and that could change the picture to that 15 days could, or 1 month could change the complete picture. So it would be very difficult to actually say what the number would be.
Got it. Okay. All right, Dr. Singhal, then it'll be difficult on the order inflow. But tell us about the revenue. The execution is something that markets want to look at very closely. So what do you end the year with in terms of revenues?
Again, you see, for the H1, our revenues are up over 20%. And if you look at physicals, last year we achieved record physicals in terms of the tonnages, the closure of punch. You see, there's been a very major focus in the last few years on closure of old projects, completion, and physical progress on the ground, and that has started showing up. So, which is what happened last year in terms of the physicals, and which is also what has contributed to this increase in the current year. And I think that we should take that as an indicator.
Dr. Singhal, just one quick point. You briefly said, competition, of course, is very high. To the earlier point about margins, and we may never get back to those historically high margins, but we'll do better from here. Markets get ahead of themselves. They fall over themselves, trying to project things. So realistically, sir, the ordering in the thermal side is going to be very robust, as I think you've indicated earlier as well. But BHEL's participation here, and what kind of what's your share of this going to be? Because we will see ordering in this space, steady ordering for the next several years, in light of competition, as you highlighted, is quite high. Go on.
So we do expect a good, the first one which came in Talcher, we have backed that one, and going forward we expect to maintain. Traditionally, we have had a 70 to 80% sort of market share, and going forward, I think we should target to retain our market share and market position. Okay. We will be quite aggressive in that.
Sure. You've put a long-term target as well, right, under your strategic plan, where you're looking at 40,000 crores in revenues by FY27 and double-digit operating margins. Do you stick to that? Do you think you can do better given the way business is picking up?
So our strategic plan, which we are working towards, and that is like that sort of target that we are going towards. And you mentioned right in the beginning about the railways, so that's another very major one coming in, the Vande Bharat, which we have recently bid for, and there are more tenders happening there. Then on the defense side, we have started the orders for the naval guns, the main guns, the SRGMs, and the upgraded SRGMs. So that's another lot which is going to be kicking in. So I think yes, we are quite positive.
Okay, all right, Dr. Singhal, we're falling a little short on numbers, but one number I think you can give us: the receivables for your company is as much as your market cap, and that's been the case for the last many years. How confident are you that you'll realize some of this money? And if you're not going to receive it, why don't you just write it off?
So let me give you another figure there. You see, receivables against the current year's billing. Now that figure in the last year was 82%. And that is a substantial jump. It was in very low 70s and late and 60s in the earlier years. So that is an indicator of the sort of effort which is going in. And then if you look at our cash position, the cash inflows you've seen over the last couple of years, despite the losses, we have managed to maintain a positive cash situation. So I think that is a very good indicator of the effort which is going there to come in. And again, what I said, about completion closures, project closures, that is also a major factor which contributes to our cash flows, and the receiver and improvement of the receivable position. Okay. That's why those focuses are there. That the essence of that focus is that we have to liquidate that receivable, move that bit.
Okay, all right. We'll wait by Dr. Singhal. Thanks so much for stopping by, filling us in with a quick insight into how things are shaping up. But we look forward to having a longer chat with you in the coming months and get a better sense of business. It's been good speaking to you.
Thank you.